Hey guys, Mike here with Quants. Let's take a quick stroll down crypto lane. Bitcoin is correcting, and what I'm looking at right now looks like a more extended formation in terms of the correction that we're experiencing here. We got this first step down, and that apparently didn't hold. We sliced through it. You can tell here how it accelerated right once it breached the spike low here, and it's trying to find a floor, but my feeling is, my impression here is that we're probably going to go down to like 40,000 again and correct, because this is already in process here. It's already being threatened. I don't see a lot of strength here. So it's coming down a little bit, and we're probably going to see a little bit more whipsaw. And that makes this whole story a little bit more complicated, right? We've got this really beautiful formation here, and we're just ready to go and take off, and now we're coming back down. I did expect it, as you recall, right, from my last update, and I said, okay, we're probably going to retest this, but we're dipping pretty deep here. And I maintain that we're probably okay until, like, I think we're good until 39,000, but that probably would be the extent of it. If we drop through 39,000, then things could get a little bit more dicey. So let's look at, in comparison, what Ethereum is doing. And it's, of course, Ethereum that we're holding this week with Cryptonaissance, our system. And it looks pretty good. It's gaining against Bitcoin. So we're, again, gaining on Bitcoin. We lost a little bit in the last 2 days. Since Monday, actually. Since today's Friday, Thursday, Wednesday, Tuesday, Monday. So we started here on Sunday. We're still a bit down for the week, but it looks like it's coming back and it's gaining, and we're probably either going to be flat or, if we're a little bit more lucky, we're going to be a little bit in the plus. I don't expect a massive advance here, but it's holding up against Bitcoin. That is, again, positive. So it's, again, the system is apparently keeping us in the right coin. Let's look at Ethereum versus USD. And it's down as well, but it's holding up, as you can tell, a little bit better, which you probably deduced, right, from looking at the Ethereum Bitcoin chart. So it's a little bit stronger. That's wonderful, but I cannot lose sight of the fact that it also has come down a little bit more than Bitcoin. It actually dropped all the way below these two EMAs. I don't use these EMAs for any other technical analysis or anything like that. They're just on there because I use them as a guide on our Ethereum Bitcoin chart in terms of evaluating the strength, which coin we should be in. Well, it's popping back higher. I think it might have found a floor here, but we'll have to see. So far it's positive, and that's a good thing. So overall, if I go back to the Ethereum Bitcoin chart, overall, we're correcting. It gets a little bit more complicated than we all had hoped, because coming back this deep means that the strength that we anticipated here, right, the strength that we thought we had, this nice little breakout, it's being pulled deeper than it should be, in my opinion. This correction here was almost procedural, all the way down to, let's say, 44,000. But seeing it back down at, 42,000 and change kind of kills the animal, the animal instincts, the animal, what's the expression? The bullish exuberance gets massively damped, and we'll see what happens here. So we're back in the old churn zone, and honestly, anything might happen. So in terms of inflection points, it's really the takeaway. I think 39,000 is really where the cookie crumbles. And again, actually, that same line that I've drawn way back, right, around 45,500 plus minus, that is still the bullish inflection point, because if it comes above that, then I think we're really are the worst, and it'll just pop higher and probably breach the next hurdle. And from then on, it's probably going to be acceleration based on all that here, because it's taking so much energy. So it's coiled up, tried to escape, gets pulled back in, which means coiling continues. And once it reaches this inflection point, the biggest number, of course, is 48,000. That's the latest spike high, and that would be confirmation. So one more time, 39,000. We don't want to drop much lower than that. If we drop below that, some real ugliness might occur. 45,500, 600, 45,600, okay? That's where I think we are the worst. And we're probably back in bullish mode. Bullish confirmation happens around 48,000 and some change. So that's where we are. It's not very complicated. Purely from a price level, we don't really care about the politics. We don't care about all the verbal jawboning. Most people who have been analyzing, who have been offering opinion the last few months have consistently been wrong. I think I've called the swings fairly well in terms of, especially once we start descent here, and since this first spike low happened, I've always presented the thresholds and provided various scenarios of where we needed to be and what the probabilities would be starting from here at this point, or had we breached from here. So things got more complicated here. I foresaw that. I knew this would get really involved, and we spent a few months in there. And I think the same kind of approach will guide us well. Right? Just like looking at the price action, the ultimate, arbiter of truth, basically, right? The ultimate denominator. No matter what we say, think, wish, hope for, none of that matters. What really matters is that we know what we're dealing with in terms of the scenarios. So, maybe one more question you might be asking yourself is this a good place to accumulate? Absolutely. This is definitely always a good place to accumulate, because it's a better place to accumulate than 48,000, right? So for all of you who have been cursing yourselves or have been kicking yourselves for not accumulating down here when we're in the 30s, are we going to come back down here? Maybe. But we're here now. That's really what matters. We're near 40,000 again, 42,000 and change. So if you're still thinking of accumulating, then this is a good place to do it. Let me actually put it on pause real quick and check one more on-chain metric, which is the whale accumulation. So give me 1 second. Okay, here we are. So what we're looking at is basically supply held by addresses with a balance over 100,000 Bitcoin. And looks pretty stable, looks pretty solid. There was a market jump halfway through the correction, started around, I'd say December. And yeah, it's fairly stable. If you're looking at this big jump here, that was early January actually. Very interesting. So almost beginning with the first trading day. Not that we have trading days really, or sessions in Bitcoin where I was trade 24/7, but maybe due to some reshuffling, as some participants, maybe institutional traders, were shuffling assets around. It happens a lot around turn of the new year. But that has remained stable, so that's a positive sign. Similar here, again, supply held with entities with a balance over 100,000, and very similar, pretty stable here. Right? See some swings around, but accumulation definitely happening if you follow this trend up. Right? So what else? This is a chart I've been looking at for quite a while now, and this actually is related to coin days destroyed. It's a concept, you can look it up. Basically, imagine that I would buy a coin, Bitcoin, right? And I hold it for a year. So I've accumulated exactly 1 year, 365 days. And then, let's say I buy something with it. Well, all these coin days that I've accumulated are being destroyed. And this is a measure that measures that. That's related basically to entity-adjusted dormancy flow. And why do we do that? Well, because the whole idea, the whole concept revolves around the idea that the younger the coins that are being moved off and on chain, the more likely we are at the tail end of a bearish cycle. So if you look at as coin days are being accumulated here, say we're going into the millions here. Back in the days, see, we're up there like, wow, 6 million. And by the way, that was a smaller market, much smaller market than we have today, right? We're close to like 2 trillion. We used to be 3 trillion, I think, up here. So it's a very interesting concept. And of course, the market has evolved. What has remained fairly stable are those dips, right? In that zone around 200,000. No matter the way the market is being organized or comprised, no matter decapitalization, it appears that when the market drops as a whole in terms of the dominancy flow, right, when we're dropping below 200,000 and then kind of dip below here and then come back out, that appears to coincide with longer term corrections. And you can see it here back, wow, as early as 2012 and then in 2015. That was a nasty bear market. And we had another one in 2018, not a happy year for coin traders. And since then, nature of the market seems to be changing because we don't seem to be able to climb back above a million. Maybe because there's more institutional activity going on. You know, your guess would be as good as mine. But what remains a static, a constant, right? It seems to be immutable is that when we drop along into this range here and then come back out, that's very important, right? When we come back out, and often that happens fairly quickly. Actually, most of the time that happens very quickly. This time, it's been taking its time. And all of that is actually very uncharacteristic, if I might add. It's as a side note, because also if you think about it, right? The inverse of the theory would be that a lot of coin days have to be accumulated on the bullish side, right? Well, we have, and here I mentioned already that we climbed over 1 million in the last few years and then dropped back down. So potentially this could be a bear signal. We don't know. But look, where were we last time? Here we were around, 67,000 or something, right? And I don't know, I can't really, it's so small, right? Yeah, over 60,000. And basically, in terms of coin days accumulated, right? Entity adjusted dominancy flow. I mean, we were nowhere. I mean, we're just here and it comes back down here. So this is interesting. Keeping definitely an eye on it. This actually ties into my personal theory, and I haven't really seen this reflected by many other analysts, is that despite this being a higher high here, this is still part of the same correction. You know, this happens sometimes. And so we're actually still correcting from the peak that we painted back in, what is that, like May of 2021, yeah. That's my personal theory, but technically speaking, does it matter? No, it doesn't, right? So, bottom line, I still very strongly believe that we're at the tail end of this correction. And, clearly, let me go back to my Bitcoin chart here. This is still very much within the realms of a very natural retest, which is, again, mentioned at the beginning of this video, something I anticipated. So, but see what happens. I cannot really predict how long this is going to take. Of course, unfortunately, the more time we spend on here, the more the likelihood that that we don't yet have the energy, that we still have to coil up a little bit more. So we might still bounce around here, scatter chilling a little bit more. Quite honestly, what I would like to see is something like this. If I would kind of Photoshop this spike low here, say that, and I would draw it over here. I don't know if I can. I wish I could do it. Just draw. Imagine this long, big wipeout that clears out a few more long positions, right? That people really start panicking, and then snaps back. I mean, that would be an awesome accumulation signal. I mean, a signal for a potential floor pattern, a really, really credible floor pattern. So from there, from here though, from where we are right now, we don't have that yet. So either we do that, we see a real wipeout, or we work our way back up and then breach first 47,000, and then especially the confirmation happens at 48,000 here. 45,000 is probably when we are out of the worst, and we're thinking, okay, we're back on the bull train. 48,000 starting to look really good, and after 47,000, I apologize, and then after 48,000, everything's gravy because it's most likely going to take off like gangbusters. So that's the way I see it. That's all I got for today. Hope that was entertaining and informative. So don't forget to subscribe to the channel and hit the bell, and I'll put the video if you liked it. And I'll see you guys next time.